I'm looking at the cyber attacks, and it's definitely, the recent JBS, beef processing plants attack, and then earlier on the pipeline, that definitely exposes our grid weakness in energy and processing. And I just wonder, from geopolitical point of view, does IRA think this is the efforts to demonstrate opportunity for others that may exploit and attack us in the future? We are wide open. That's my own feeling. I wonder what Ira feels, but
Ira, did you hear that question from Robert?
I did.
New arena of new warfare.
I did hear that question. Let me get rid of it. I'm going to stop my video, but I'll. Yeah, and you know what? I don't know how to answer that. There are certainly actors out there in the world who are profiteering from a new form of nefarious disruption, and they get paid. We don't know how much ransom is being paid to these firms, to these players in this arena. So I don't know how to answer that. Is it state sponsored? That's a big question, and we don't know. We don't know. Or are they just rogue actors, no different than the Barbary pirates in the late 1700s, early 1800s, and all types of, are they any different from, what was the name of that group from Detroit, the Purple Gang, who found their way into shaking down, I believe it was people in the cleaning business, because the people didn't have insurance, and if you burned down a cleaning store, you had the liability to all the people whose clothes were there, so they were an easy target to muscle and shake down. So this is just now elevated to a new level, because of course you have the ability through technology to have a far greater impact of a lot more people. And as we saw with the pipeline, you know what? Your ability to shut down is phenomenal. When is it going to be the air traffic controllers? I mean, where's the limit here? And as usual, honest people have struggled for millennium to stay ahead of those who are seeking to do nefarious things. So that's the way that I put it. I have no in-depth knowledge of it. I kind of watch it and as vulnerable as everybody else. And you hope that the quote unquote good guys can get ahead of this and put an end to it. But there are certainly a lot of groups out there from what it seems, and they're all over the world, but there seems to be a preponderance of those who operate within some of the traditional borders of Russia who are playing this game. But I don't know, we're all vulnerable to it. And the more we give ourselves over, the more vulnerable we become. Well, let me raise an issue that happened with me the other night. Robert, does that make sense to you? I don't know where.
Sir, no, I was just, absolutely, it does make sense. I'm just a little shocked how easy it is. And imagine if someone wants to paralyze our economy, it seems almost excessively easy if they will just make a list of the areas they want to paralyze us, even temporarily, for a week or 2 or 3 or a month, if it's a concerted effort. You don't feed the people, you don't give them the warmth as far as the energy, right, or the long gas lines, and all of a sudden country is in chaos. So it's just, to me, it just demonstrates to the rest of the world how easy and vulnerable it is.
Yeah, I agree with you wholeheartedly. So when you really want to get out there and do some, it's like almost like they're just playing with us right now, right?
Yes, it's almost testing. It almost feels like testing us, how quickly can we get back up. And it's almost like a prelude. I'm not, any trying to speculate about any wars, but any future conflicts, this will be used.
Yep.
Anyhow, sorry.
Yeah, you know, all right, so isn't,
I
I-
don't
Let me give you a quick,
yes,
I went to the Met Diamondback game Monday night because I got to see Jacob deGrom pitch, and what a pleasure. It's like going to what I'll call Comiskey Park, because in homage to Matt Kenna, who's, who went to high school 4 blocks away from there, I believe.
I did.
Yep. So I go there, and of course, being Ira, I have cash in my pocket. I'm going to go, and I walked up to the box office to buy tickets. Nobody takes cash. Can't pay it with cash. Got to give us your credit card, which I'm opposed to, because all it's going to be is data mining, and you got to give your cell phone, and they'll send the tickets to your cell phone. Okay, so I do it. And the tickets are, unlike at Wrigley Field, which I was a season ticket holder for 35 years, are humane. I got good seats just walking up for $46, and it's just a whole different experience. But you can't pay cash anywhere. You can't pay cash at the concessions. So as I'm thinking about this and I'm partaking in it, also you can't bring purses in. We didn't know the new rules. You have to have a clear bag or a purse or a bag that's like 3 by 5 inches, no more. So my wife had to go back to the car, put her, and hers was probably 5 by 7, but no, you can't come in. So these are all new things. Okay, so we abide by them. But I'm thinking about it. And all we hear from the Fed is how, especially when we get to the people who have struggled most during the COVID and pre-COVID, about how underbanked the bottom 25 to 30% of income earners are underbanked. They don't have bank accounts. They don't have debit cards. They don't have credit cards. So you have just locked them out of going to a baseball game.
Wow.
Think about that. Why are not people up in arms about this? They are forcing you into the electronic money world, because that debit card is really only electronic money, and it will change its form. But I only ask this in reference to Robert's question, because when you go off the cash system, it's all electronic. Think about how easy, if you think that, going after the meat supply or a pipeline is easy, wait till they're able to shut down the entire economic system, because it's all electronic money. I don't like it anyway, and I'm not a conspiratorialist. Anybody who's ever listened to me, I don't give into that crap, but I do know from reading the academic, and I know we've talked about in this room, the academic literature, why they're going to push electronic money, whether stable coin, or as now, it's leaking into the everyday parlance, which is central bank digital coins. It's because it's the ability that they're going to have to force you to spend your money. That's what this is about. This is the ultimate for the neo-Keynesianists, because when they realize in Europe that even when you go to negative rates, if people take their money out of banks and sell it in mattresses or buy gold or buy Bitcoin, they're moving away from the system, and that money is not doing what they want it to do. If I throw my money in my mattress because I'm a little bit nervous and we actually go into deflation, well, I'm better off, but that makes it all worse. So through electronic money, they're going to be able to go to negative 5% interest rates, which will at some point, you're going to say, well, I can't hold on to my money. I have to spend it because it's a deteriorating asset. Well, the gold people will argue with you for, 50 years. August 15th, 1971, when Nixon closed the gold window. I can tell you exactly where I was, because I was overseas. I was an 18-year-old lad working on a kibbutz, and I happened to be standing in line to buy something when I was told that my dollars were now worth less in exchanging them. So I was 18 years old. I was just starting to read a lot about Marxist economics. And so I was paying, I knew a lot about economics. I had read a lot, even before I got to college because it interested me. But I can tell you, August 15th, I know exactly where I was, standing in the Afula bus station buying some things. So that is, this is a big thing. And yet they're going more electronic at a time that things are more vulnerable. And let me tell you this, government safeguards outside the military are very weak because they are substantially behind, because the amount that they spend on software protection and cybersecurity does not nearly keep up. So there's a lot of vulnerability in the system. Okay, that was my concern, but I'm waiting for somebody, especially from the government, to admonish Major League Baseball. Because what do you mean I can't bring cash? And when you really think about it, those people at the bottom, and my wife she is such a great human being, far better than I am, who has worked for the Robin Hood Foundation in some places and doing tax returns for those who are at the lower end of the spectrum to keep them out of the grip of H&R Block, who rips their as we would say, Gederum out in the way that they use them. And my wife has done thousands of returns when we lived in New York, she would go to Harlem, Spanish Harlem especially. And so she has seen this, and you want to talk about a group that's preyed upon and underserved. This will be the group, but you're locking them out. And you know what? I don't mind tipping somebody in cash. You know what? If they're working at it, okay. You know what? Am I helping foster a gray economy? Yeah, I know it, but hell, I know people, you know, at the top who spend, you know, fortunes on tax avoidance. You know what? Let's be honest, and let's have a modicum of respect for those who do the shit work every day. And if they put a little extra money in their pocket and it gets by the government, I have to tell you, I'm all for it, because that's all part of what in my mindset is a sense of liberty and freedom. But and I'm not on a pedestal. That's an economic outcome of all this. Okay, let's go back.
You know, Ira, so I just to that point, because I think that feeds into so many questions I've got, or just thoughts, is COVID had quickened the pace of a cashless society, I think. Jen and I were in Florida in January, you know, after I had gotten over COVID, my father's death, all of it. And we went down there for a week. There was, of course, I brought a couple of thousand with me in cash. I came back with, I think, about the same amount that I left with.
I know.
They wouldn't take cash anyway.
Why would you try to spend it?
I tried to spend it at restaurants, wouldn't take it. Bars wouldn't take it. You know, everything was on debit cards or credit cards. You know, everything. It was odd. And I remember thinking that, and now it's just getting worse. You know what though, Matt? I go out of my way to tip with cash. Me too, actually.
That's what I do. I have to push back. You know what? Whatever way I friggin' can, I'm pushing back, because I think this is a very dangerous path. Money in my pocket to me is very freeing. A credit card, no. First of all, because everybody follows it, and the banks are selling the data out there anyway. They're all mining data, and it's enough that when I turn my cell phone on, it tells me how far I am from home. You know what?
Oh yeah.
I know this is the world, and I'm not a Luddite, but it doesn't mean that I go quietly.
No, I'm with you. And now the move to digital currencies, I'm wondering. I haven't bought a new car, but I'm wondering if it would be easier for me to buy a new car in Bitcoin than it would to come with a bag of cash.
Well, but then you're going to have to pay the IRS says, well, we're going to tax your profits. So when you go exchange that, that's one of the big issues facing us.
This is interesting. So going into your last blog post.
Okay, well, let me tell you, I have one that I've been sitting on since Monday morning. It just has, I could send it to you in raw form.
Oh, please.
Published tonight. it was about the yen, and it was an open letter. That's how I posed it to the G7, because the Japanese are absolutely, the blog post will be out tonight. I mean, I could send it to you now, but it'll just disrupt what we want to.
Yeah, no, yeah. I'll read it later. But there's so many things going on, and obviously there's always a million things going on, and I feel so out of touch. I mean, I really do.
Yeah, I hope your wife is feeling.
Jen was in. Do you remember Jen when she was you? I mean, I know you've met her a number of times, but did you remember her on the trading floor when she was the deck holder in the yen for Nikki G, Sally, all of those guys for IFOA.
Sure. Yeah.
Yeah, she ended up right after my eye got better. As my eye was healing, we didn't do anything for Mother's Day because of the eye. The week later, Sunday, I took her down to Gibson's Italia for dinner, and the next Monday, tax day, she was in the hospital, bleeding ulcers. Didn't even know she had ulcers.
Oh.
So she's doing better. She's getting stronger.
How was that Gibson's Italia?
Very good. Very, very good. Very nice.
My daughter was actually offered a very high level job there, but then she knew she was getting ready to leave, because I had run into what's his name, who owns Gibson, one of the owners. There's a group of them, but the woman, she's actually a Bridgeport woman, Laura Piper, has mentored my daughter as a chef. But Laura Piper started the Gibson's Kitchen, so she had talked to him, and I ran into him because he's a friend of my. Not a wake, but at a Shiva of my friend whose father died, and he's the guy who owns Nuts on Clark.
Oh yeah, I love that place.
Yeah, so he does a lot of business with them, and
talking about cash.
Yeah, well, but he's a childhood friend of mine, so we've traveled together for a lot of years. But he was there, and I talked to him. So he said, "Give me your daughter's card." So I did. I had my daughter contact. Well, he gave me his card. My daughter contacted him. He said, "No, I'd love to have you." He says, "We don't find people like you. Haven't gone to the CIA." But she said, "No, I'm not going to stay around long enough, so I'm out of here." So
don't blame her. I'll tell you, the restaurant, the food is delicious. It's great. It's the perfect combination between Italian and steak. So you can have like an old fashioned Italian meal. You get you have your antipasti, and go on through your fish course, all of it down to your pasta and then your steak. It's just really good.
Yeah.
And Jen's getting better slowly. All right. So we a while back talking about conspiracy theories. When we were with Judd, I had asked you about the move away from the dollar as the world's reserve currency, and Judd kind of got on me in that conversation about it being conspiratorial, and it was. But and I remember asking you this question in our last conversation, and again, I am so far behind on news reading and what's truly going on. I just have some headlines, so I'm going to rely on Robert and others in our group to really kind of reach out in our conversation today. But I want to circle back to SWIFT. So as with the move seemingly towards a digital currency and the possibility of another conspiracy theory I brought up a few years ago of the Chinese, going towards some sort of an asset-backed currency. Now it looks like the digital currency.
Yeah.
As we're discussing, I don't know how deep it is. I need to, obviously get more caught up. More sanctions with Russia, and Russia now threatening to really move away. There's all kinds of alternatives to SWIFT, but it really moving away from the SWIFT-based system. Is that a move away from SWIFT in Russia as a reaction to increased sanctions? Would that be an end run around the dollar and a further move away from the dollar as the world's reserve currency?
I would say so, but again, what's the timing here? It's in nobody's interest, And, and this is what the blog we'll get into, tonight's blog we'll get into here. Let me see if I have it just, I can put in your hands. Hold on. Yeah, and then I will, here, I'm gonna send it to you. This is really raw, totally unedited. So here, I just sent it to you right now. Oh, and I'll send you, there'll be an addendum piece because it wasn't published. Hold on. Send you that too, addendum, so you can see. So you saw this weekend, right? Did you see what happened that the Chinese announced that they were lifting the reserve requirement from 5 to 7%?
Yes.
On banks with foreign holdings. So you've got $1 billion in US dollars. The amount of reserves went from 5 to 7. So you went from 50 million to 70 million. And they're trying to weaken the yuan. And as I write in the letter, I say hogwash. They may be trying to slow it. Am I coming through all right?
Yeah, perfectly.
Oh, how about now? I'm going to turn actually my microphone. I don't have that. I'm just using it. Is that better?
Yeah, still great. Very good. No
Right.
difference for me.
So let's look at it like this. They sent a message, but you saw what the yuan did. And if you put up yuan, I don't know whether you have that chart or not, but it's at 6.38. Okay. So did it make a difference? Yeah, minimus. And they were sending a message. I think the low on Sunday, yeah, it was 635.70. We're now at 6.38. We're at 6.35. And last week we closed at 6.36. Now these are the lowest levels we've seen since May of 2018. Okay. Now, that also coincides. That's the second quarter of 2018, and we know that the Fed was getting aggressive, raising the federal funds rate, as well as shrinking the balance sheet. And then the dollar started to rally, which then leads to, of course, what we know what happened in the fourth quarter of 2018. The dollar soared, the equity markets got hammered as the bond market got hammered because Powell had erred. And I will say that in a July hit with Santelli, we had talked about it, that you do one or the other, that it was going to be a mistake. And of course, it tightened dollar liquidity, which led to a dollar rally, which you saw the yuan go from about 6.25 almost up to 7 over that period, which was quite a move. So these are not unrelated events, by the way.
Nope.
And then, of course, we get the Powell pivot, and the dollar does come off that first quarter, but things in the world were starting to change. And then, of course, during the pandemic, the dollar yuan at the height of the world economy, it's actually about a year ago, the yuan closed at 7.13. So we've had a fairly significant move, I think 15-16% down in the dollar yuan.
Hmm.
Now, as you know, I've been on this far longer than everybody else. There are a lot of people now that and I take them to task, at least, be honest enough to, Louis Gavet and I were out there, we were talking about this, and you saw it again. What led me to it was that commodities started to move well before the rally, well before the global economy started to turn up, right?
Mm-hmm.
We know that.
Oh yeah, been all over that too.
So we saw that and reacted to it, and it made perfect sense. And then, of course, Stan Druckenmiller picks up on it, and when Druckenmiller talks, because as we, as somebody said last week, there's a fetish for experts. Even though Stan Druckenmiller was one of the smartest guys probably the smartest guy in global macro going, not only as a theoretician, but as a practitioner. But when he said that, hey, you go back to last April, March and April, when the bonds were getting hit pretty hard, it was because there were foreigners selling. And now, so let's say that the Chinese sold 10% of their holdings. They sold 300 billion. Let's say that. Well, what were they going to do with the dollars, with the cash dollars that we're raising now that they were out of treasuries? It made perfect sense that they would start buying things on the cheap. So they started what I believe was stockpiling all types of things. But why wouldn't you? I mean, if assholes in New York can buy paintings for $180 million, why can't the Chinese take 300 billion and start stockpiling things that they're going to actually use and not hang on a wall? I mean, it's all about, you know, some type of wealth preservation. And if they see that the goal of the Fed and of the US Treasury is to put as much pressure on the dollar as possible and to prolong QE, well, I'm holding a depreciating asset. Why should I hold that? So it made perfect sense. How much of this are we going to continue to see? Don't know. But you could see the Chinese are back to playing. I'll call you back. So we will we will look at things and wonder, well, when are they going to make the move? But they do try to stem everybody tail coding them, right?
Mhm.
We saw it last week or 2 weeks ago when grain prices were so, all of a sudden for the first time, the Chinese announced cancellation of some corn shipments from the United States. Now, the amazing thing is that this whole rally up in the grains, they have not played that game, and they've been playing that game for years already. You know, when the market starts getting too much momentum and pushing prices away from them, they come in and they know what to do. They're, as I say, not conspiratorially, but just fact, they're pretty good traders. So they know, don't get too far ahead of us. And that's actually what they were warning the other day. And it came on top of some comments from some higher ups at the People's Bank of China, one who made a statement going, well, the stronger yuan keeps inflation in check, because for exactly the reasons I've been talking about for months and writing about for months, is that, hey, if you're trying to empower and enrich your middle class, let your currency strengthen. It's the United States middle class was built after World War II when the dollar was, the king of the world. And, the United States had the advantage of, first of all, they were exporting because nobody had any capacity, but whatever they bought from the rest of the world was in dollars. And it was so strong and things were cheap that it empowered and enriched the middle class. Well, if that's what your role is going to be. And again, tomorrow I am doing a 6 a.m. podcast with one of my favorites, Michael Pettis, the professor. He teaches economics in China and has written some of the best stuff. And I've read so much of his work. So this is a great honor for me. And hopefully we will really discuss this in depth.
Is that with Bernoulli?
Huh? Yeah.
Oh, that'll be great.
So this is
very interesting, Ira. I hope you ask him, as a person who lives there, that will be interesting to say what he says, especially about commodities purchases, because I agree with you that they're just playing games. I sent you that article from China Daily on May 31st, that the Beijing food waste regulation goes into the effect where, the Beijing municipal legislature on Thursday passed a regulation that they would in fact fine the catering services, or whoever tries to mislead or encourage, as they say, consumers to order too much food. This tells me that they are still short of food.
Well, Robert, people now, they're picking up on this discussion more and more, and they're bringing down the points that really I've discussed for quite a while. And if it sounds like I'm blowing my own horn, I am, because
It's
Nobody else will
we've
do
been
it.
talking about this for 2 years.
Yeah, nobody else will do it, so I'm doing it for myself because I have to listen to everybody else, who, if you're not a tagline, if you're not a tag on CNBC, you're nothing. So this has been going on, and as people have rightly talked about, John Authers today has a piece talking about this. I said, well, this is, and I send him my blog at times, so for him not to, but I can't get cited in there. He cites all these other people who are on his Rolodex. But here's the point, and the Chinese leadership know it, that here's June 3rd, today's June 2nd. Well, 32 years ago already, on June 4th, 1990, Tiananmen Square. And a lot of the Chinese leadership are very aware that leading up to Tiananmen, inflation, because the Chinese economy was so robust, was growing, was on the boil in China. And that led to a lot of the discontent, which the students were able to tap into because of the inflation. So they're very concerned about rising prices, which makes the yuan, 625 has been my initial target, but I really do believe that we're going to 587. 587? Yeah, I believe that's what it is. Hold on. Which is when the Chinese officially devalued the currency on January 1st, 1994. They devalued it 50% from 5.8 to 8.7. It was that was the advent of NAFTA. At the same time, on January 1st, they devalued the yuan 50%. So, we will get a test of that. We have not been back there. We've been, I think the most recent low was made, oh yeah, I can tell you right now, was January 14th. We were down to 6.03. Now we're at 638. So these are things to be watched. And Robert's, you're dead right on target. When they put out these things on food, they're always concerned about food. That's why the stronger yuan makes perfect sense. And the fact that the yuan was rallying. See, the typical discussion has been, the global economy turns down, the Chinese will depreciate the yuan in order to protect their exports. It's exactly the opposite of what took place over the last 12 months. The world economy was going down, down, down. Europe was slowing dramatically. The United States was slowing dramatically. Japan is so, and the yuan was beginning to rally, to appreciate, as food prices and other commodities. I mean, we were looking at, and we talked about it ad nauseum, the Bloomberg Commodity Index, which broke from 82 down to 60. And then yuan was rallying. So that said, sit up and take notice. And what were they buying? Iron ore, copper. Let's go on and on and on. And of course, food, all things that they need. It was perfect. It was
U.S. treasuries.
Yeah, and less U.S. treasuries for good reason, because why am I now? People say, "Oh, they're going to sell all the treasuries." Yeah, no, you don't put a gun to your head. This is not Cleavon Little and Blazing Saddles. No, you're not going to shoot yourself in the head. It's just silly. So, but you can sell 10%, right? It's like I say, put 10% of your wealth in gold. It's not earth-shaking. It's just a strategic move. And that's what the Chinese were doing. But I think that's absolutely the case. And now we'll see that we're back into these areas. I still think 625, it's been my target since I've had this discussion. So probably for 8-9 months on, it's been a target for me. I'm starting to watch the ruble more because I think the Chinese and Russians are doing certain things together and have
Together, yeah.
Strategically.
Is that, let me ask you just real quick too, back to sanctions. Is that why we're starting to ease sanctions on Russia? you know, because Russia and China are working together, you know, or is it because, or is it a sign of weakness? Is some,
Manny, that's a great question. There's a lot of people out there conjecturing. My work is only conjecture too. So am I certain? No. Is it what political theorists or scientists would call a wedge issue? Are they going to use it to drive a wedge between China and Russia? If they think so, they're foolish. Or is it doing that they're trying to make, you know, that the Germans are so opposed to those sanctions because they want that pipeline?
Mhm.
You conjecture for any reason. And, you know, on my blog, the discussion, which really was led by Dave Richards as usual, and Mike Temple, but Dave Richards wrote some great stuff, but it's conjecture. I don't know. Was the United States trying to make, you know, love with Germany, you know, trying to woo them back because the relations were bad under Trump? Don't know. It's all conjecture. It's all conjecture. So roll out whatever expert you want. I don't care about your friggin' experts because I'm going to do my own research and I'll read your experts or I'll listen to it and I'll go, oh, that's an interesting, but is there any validity to it? I don't know. But I will do that work on my own and try to dig. And I'll go to sources that are not in the necessarily most popular, pushing the most popular narrative and therefore making it out to CNN or MSNBC or Fox or CNBC or Bloomberg. You know, there's people out there who are really doing pretty good research, who people have never heard of, but I'll read them and I'll go, let's see. And to tell you, I don't know. I don't know what the purpose is, but then you have Putin stick it right in Biden's eye on the Belarus issue. I mean, stuck his, couldn't wait to come up with 500 million. And it was the day after that they removed the sanctions on Nord Stream 2, Russia brought a bond to market, a $2 billion bond that, you know, was way oversubscribed. And then they take 500 million and give it, you know, and offer to the Belarusians, you know, in case those sanctions that Europe was going to put on for the situation with the plane. So, you know, a lot of things that work, and, you know, I try to connect the dots, but as my tagline says, 2 + 2 = 5. So there's a lot of things that are not adding up here, but, you know, as I tongue-in-cheek said, well, why is Biden going ahead with the Putin summit and where's it being held in Munich? Why would you go ahead with this when they've just stuck their finger in your eye one more time? So, you know, mid-July, June 15th, I'll be watching very closely. I know that the way the White House will spin it, you know, that this is done in the efforts to create peace, you know, that's conjecture too. But something is definitely going on here. They want something from the Russians, and the Russians, of course, you know, what needs to be delivered? What am I going to get? Because it's a give-get world.
Well, I think the Russians already won. This Nord Stream 2 is bypassing Ukraine, bypassing Poland. Those are lucrative fees. Of course, Ukraine wanted it. Poland didn't want to have anything to do with it, but because they are afraid that the West is getting hooked on the Russian energy, and they can wiggle now, the tail can wiggle the dog.
Well, somebody wrote a really good piece about Total and the other large European energy companies and how they have benefited because they get to then play in North Africa while getting Russian, you know, natural gas. So a lot of things going on here. And don't forget, the media is not going to tell you because that would actually take some effort. And all they want, you know, is to continue the narrative, whatever they're getting from their quote unquote experts. But there's very interesting things, and Robert's point is very well taken, and they're going to keep them on. And you know, the Ukrainians were really pissed because, you know, there's already the pipeline, and that will diminish their revenues dramatically. And this is the whole time that, you know, the Biden group is, you know, whacking the Russians for Ukraine and other, you know, and then here they you know, they can't wait to push this out at the expense of the Ukrainians, which is interesting because it goes back to what I've written about a few times, and I don't know whether I've discussed in this room or not. But well, and here we are. We're talking after Tiananmen. Of course, the West placed heavy sanctions on the Chinese, and then, as Deng Xiaoping stated, when the West needed their support, and that's why the United Nations is a joke and a half, because the Security Council, the 5 standing members, permanent members, who is it? France, Britain, US, China, and Russia, right? And they all have veto power. So when it came to the vote on the UN vote on invading or going into Kuwait against the Iraqis, the US traded those sanctions that they had put on China for the Chinese vote for support for the invasion of Kuwait. And more than that, Deng Xiaoping said that the sanctions where the Chinese Communist Party was suffering after Tiananmen Square, and rightfully so, the sanctions acted to give a boost to them because it raised nationalism in China and made the Communist parties, the flag wavers and going, I see the world is attacking us, and placing these severe sanctions on us, and people got behind them. So, as my piece a couple of weeks ago, sanctions are sanctimonious. I think we're seeing this yet again. Pathetic, but I don't think much of the U.S. State Department, and I haven't for years. So, and the Treasury, because they grouped together with this. So, you see it. So, and I'll take my lesson from Deng Xiaoping. I think he offered the world a lot of wisdom, but yet here we go. Sanctions, sanctions, sanctions. Okay, so for what purpose? I think they backfire and cause you a lot of pain.
Yes. Ira, I have a question about what our corporate purchasing guys are telling us is that the prices of tires, I'm talking now ag equipment, not commodities, tires, right, hydraulic components, whether it's pumps, valves, and of course more commodity like steel, big iron, they will not go back to the levels of pre-COVID economy in the next 24, 36 months now even. And really? They're saying that, for example, India, they even haven't started recovering from COVID, and that the emerging markets Brazil will only kick in into the high gear maybe in the next quarter or maybe a little later. So that pent-up demand and almost a chokehold on a supply chain, global supply chain, will last for a lot longer than we think. And they're giving us red lights. So that's just my observation. But do you see this, could we extrapolate this outside of the ag manufacturing world? Do you see this in other sectors of the economy? Or, you have a lot more network than I do.
No, I really don't. So I can just tell from my reading, but, this gets into the whole thing with the Fed and is an inflation transitory. I don't know. I don't know. But my view is that the inflation discussion, the choke points are interesting for the transitory, but my bigger point, and John Authers picks up on it, but my whole point with China has been, if China is making that transition to being a more domestic consumption-based economy, if they've moved, and they have moved from 37% to 41%, but if they're climbing because they go, oh, you know what, we're just at this stage in our economic development, that's going to put inflationary pressure on the global system until at least India really comes online in a very meaningful way. But the impact is that China, which was the deflationary weight upon the world. Why? Because you unleashed a billion Chinese workers and prices were kept low and wages were kept low. But if China is now competing with everybody for imports of manufactured goods, and for that means more and more raw materials coming into China, now they're no longer a deflation drag. And the Fed models are just totally wrong. And they are really going to get blindsided here, because rather than being a disinflation, a disinflation variable, they're now becoming a competitive for all these goods, and wages are rising. So if they're rising there, they're going to rise everywhere, because it's through China and and as Robert can speak to, Eastern Europe being freed after the fall of the Berlin Wall on November 9th, when all these people started entering the global workforce, and there was so much pressure. And who paid the price? Of course, the American worker, and those at the bottom. And that's why when I hear people talk about wages, well, you know what? The American worker needs a wage rate. They've borne the brunt of it, and that's what got you Donald Trump, because the unhappiness with the globalists became a national issue. They finally said, no more. We are getting so badly squeezed, and they still got squeezed under Trump, but he was making enough noise in a nationalist sense, and I don't mean in the ugly nationalist sense, but saying, hey, America does come first here, and we have to rebuild the American middle class. And I'll tell you that,
that's what worries me, Ira, because I see that the way they are doing this rebuilding by offering money that people buy a Samsung or China-made Apple phone, that's not helping our economy a lot. And I'm afraid that the prices will go a lot faster than the people's wages. We in Heston here at Go campus has 100 openings for welders, machinists. We only filled 60 of those positions, and we offer $60,000 for people who have just a high school education. And they're good jobs, but I'm afraid they will not feel any richer, because prices, go to Costco, Sam's Club, and buy yourself a steak. It is 40% higher.
Yeah.
Listen, it's these, and I believe it's because you've taken China off putting downward pressure on prices, where now they're competing. And again, the policymakers in this country, I believe, are being totally blindsided because it doesn't fit their damn model. It's why I sit and rail against models. That's why the tagline is from Dostoevsky's Notes from Underground, that 2 + 2 = 5, not from Kipling. It's 2 + 2 = 5 because in Dostoevsky's Notes from Underground, he's railing against the rationalists. And the rationalists in the 1800s were the equivalent of today's model builders. You build a model, you build it and make things, and then you bias fit everything. I'm sorry, that's what goes on.
Yeah. So Ira, that leads me to a question on the real rates, because I'm going to, almost pun intended, instead of 2 + 2, I want to say 2.3 minus 3, it's minus 0.75. In other words, long-term treasury yields of, let's say, 2.3%, and now inflation, let's say at 3%, we are having a first time, at least on my clock, I've been in US on and off since '83, we have a 0.75 negative yield. How are we going to get in US a negative real rates for the rest of a decade, or in the future to come? What is your view of it? Because
great question.
Wait, give it to me one more time. Sorry.
Okay, so real rates. I'm noticing first time since '83. I might have missed the period because I was 10 years in Germany, England, Spain, and Poland. But from 1983, I don't recall in US negative real rates. And the way I calculate it is, like they told us in the MBA class, take a, let's say 30-year treasury yield, that's 2.3%, minus the inflation rate, which now it seems like a CPI starts bumping to 3% or maybe higher. So if I take 2.3 minus 3%, that's a negative 0.75. So it shows us for sure that we are in a negative rates, real rates environment now in the US. And do you see this continuing? Because in Europe, I've seen it for many years.
For sure, because this is the only way for them to financially repress savers. Listen, this is what Keynes called the euthanasia of the rentier class, meaning those who clip coupons or who live off their interest or rents from other things. So this is what you financially repress the shit out of them. That's how they get you to spend your money. That's why they keep real rates. Because if you went to real, look at, if I tell you that the 10-year treasury was over the last 40 years had a real yield of 2.4%. Think about that.
Yeah, no, I completely understand that because I grew up, you know, in my late teens, early 20s around the GM, Dodge, Chrysler, Ford retirees in Detroit, right off the Davison Highway in Hamtramck neighborhood. And these guys lived on the yields and on the, you know, when they retired, they lived on the dividends and the yields from the banks. And those guys, if they would be still alive, they would be just completely dissatisfied with this.
Here, let me give you a real number, Robert, as long as we're talking about this, okay?
Yes,
now,
sir.
You know, like everybody else, you know, who trades, you have to keep, what's the word I'm looking for, Matt, in your account? You have to keep funds to, you know, for margin. So
what do you mean? The leverage?
You know, in your trading account, you have to keep, you know, money to cover your
Oh, yeah.
Right?
Yeah, margin.
So I keep X amount of cash, but I also, because, you know, I'm conservative, I keep X amount in a T-bill because I don't want it all in cash, okay? I had a T-bill come due May 19th. And I roll it over every 3 months, okay? And you buy the T-bill at a discount, and of course, when it comes due, it's at par. So I have a $500,000 T-bill is a standing margin, you know, besides whatever cash I have to do to settle up every day. And so I rolled it on May 19th. It comes due August. So how much do you think I earned on that 3-month T-bill going to from May 19th to August 19th?
Point. Yeah.
Give it to me in dollars.
500,000, not more than $500.
This is a 3-month T-bill. You ready?
Yeah.
$2.53.
Yeah.
$2.53.
Wow. No, I was a bit of mad. I was about to say $625, but no, it's $2.50. That's not 30. You're right. Oh, yes.
When you roll your T-bills, do you actually pay? I don't pay any attention to them when I roll them. Do you actually pay attention? It makes me sick to even think about that.
Do I pay? Look at.
Of course you do. I don't. I can't. But I know you do.
I'm a big picture person, and my wife will tell you that the little nuance, I don't give a shit about them, to tell you the truth. But when it comes to my account, I go through with a fine-tooth comb every day.
Yeah.
Because I want to know, you know, that the prices are. I can't help it. It's the floor trade, and it's actually a good habit. So I go through it. Everything. Before I start,
Jen does it for me.
hold on. One second.
Jen does that for me as she did on the floor. She's, you know, like clerks for me.
What's going on?
So the point is, other than just the safety of the T-bills, that's a free money now, or doesn't give you any, you know, pricing power. But that's the point I'm also concluding, that no,
Oh, okay.
you keep the money in a
Okay.
bank,
Yeah, hold on.
negative real rates. You
I got
eventually
Matt Ken on
you're
the phone
trading your
here.
capital.
Hold on. Let me silence him.
No, I'm sorry. Ira is answering.
Yeah, he's on. I think he picked up the phone.
Yeah. So see, Matt, here now we have a dilemma that Europeans used to have, or have in Germany, when they were saying, well, they liked buying gold, for example, because they said it's at least you don't lose the money unless you store it in a bank, and they also found a ways to charge you holding fees for it. So there was a negative rates, and it was just not. It's still
Okay.
in the world.
Sorry,
It's not bad.
sorry, I had to take that call. Okay. So I'm giving you real numbers. Okay. So Robert, you can talk about whatever coupon clipper.
Yes, that puts us. You know, I was just telling Matt, in Germany, people also had to learn how to live with it. It's still minimal, but people are griping about it, especially retirees and those who are not risk prone, you know, like us traders.
Right.
But
No. Yeah.
my Argentinian friend, of course, he's laughing when I mentioned this, because he says, look, if you would be in Argentina 2 years ago, you have made money, and in dollar terms, you would make $16, let's say, an hour. I'm sorry, $100, let's say, a week. By the end of the same year, you would be making only $16. It's unbelievable. So what he would do is he would run to the bank every single time he would get paid, and he would buy dollars because they were holding value. And sometimes slightly torn dollar, they already were fussing about it. That's why we got into this discussion when I went there. He says, would you mind exchanging me some dollars? I said, why? Are they fake? He says, no, they're slightly torn, Robert, and I'm having problem here. I took him back to US. The bank even didn't fuss here, but I gave him a brand new bills. But he was saying he was parking everything in something else than Argentinian currency. And we don't have to worry about it completely yet, but now it's the first time when I also look and I'm saying, wow, I'm not making any money anywhere, whether I keep it in a TD Ameritrade overnight or in my bank, it doesn't matter. All of a sudden, negative yields.
It
forces me to be a little more aggressive. It looks me at least to look for, you know, the more opportunities on the trading side.
Oh, and we've talked about that, Ira, before many times, is, you know, from a personal standpoint, and on my end, Jen takes care of all of that stuff, as she clerked on the floor for so many brokers. I don't look at my daily statement every day because I can't, it hurts me to be mindful of my P&L. So Jen absolutely handles it all. That's the benefit of, you know, being married to one of the best trade checkers and clerks on the floor for 18 years. But you know, if what Robert is saying is, well, you know, as truthful as it is anecdotally for each one of us, that we're looking for yield that makes us more risk takers. We're, you know, instead of putting money into a CD at the bank earning nothing, or you know, a $500,000 6-month or 3-month treasury bill that's earning, you know, $2, we're going to put it into gold, Bitcoin, Dogecoin, something everybody asks me about every day. I have no idea about.
This is an excellent point, Matt. So it's the same thing with equities. Let's say my Ford pension fund.
Right.
One day, they are forced now. They cannot, I wonder where they're putting their money. No wonder they're trying to persuade people to take the package and, you know, lose the obligation altogether. Because now I see that maybe for us, you know, investors and traders, it seems like equities will be held up artificially. I don't have an idea about the bonds, but it seems like we're not gonna go anytime soon into the levels we saw in March, because everyone is forced into taking higher risk, including equities.
And isn't that what we were talking about a few months back with the Central States Pension Fund? Instead of being carefully deployed, it's deployed into risk assets, let alone, well, my God, you know, the Japanese pension that we talked about a few months ago, the biggest pension fund in the world, right, is heavily invested. The only country or the only central bank that has any sort, how about this? The only central bank with any sort of an exit plan or exit strategy is the Swissy, or the Swiss National Bank.
Maybe.
You know, I'm sorry, you're back, Ira, I'm sorry.
Yeah, maybe.
Oh yeah, well, yeah, right. Yeah, they're invested in
The
Apple.
question, Ira, I guess from Matt and me is, do you see US exit strategy? Because if we don't, then I don't see how the equity markets can dip too
Right.
much, because everyone is forced to them. Unless you have liquidity exit plan, and then of course, as always, markets will throw the tantrum. So I wonder, you know, what's your view, Ira?
You know, it's again, but let's go back to what Yellen and Powell and Bernanke have told us, right? If we're concerned about this, because they would say, well, we get letters all the time from disgruntled people who are savers and are being absolutely crushed. But don't forget, and I beg people, go read one article, go Google it from Carmen Reinhardt on financial repression after World War II. But her work is outstanding. And the Fed would tell you this: stop crying. Right? They said this several times. I'm not making it up. I'm paraphrasing, but I'm not making it up. Stop complaining about that you're not getting any interest on your savings. Your home has gone up in value. Your
Yes.
portfolio has gone up in value. Your grandchildren have jobs, and they strictly grandchildren, because we know who's complaining about being financially repressed. Your grandchildren have jobs. Your neighbors have jobs. So stop complaining. So what the bottom line, if you sift through that, is bottom line is this: somebody is always going to get screwed when it comes to policy making. In this case, it's what we call the rentier class, and Keynes would applaud it, the euthanasia of the rentier class. If you're getting less, that's great, because in order to right the ship, you have to sustain negative real yields. Because anytime you have a massive debt overhang, nothing relieves debt. Nothing relieves debt like inflation and negative real yields.
So if you just answered, yeah, we just taking on that like drunken sailors.
Yes.
The leaky ship. So this points to a weaker dollar for longer for us traders, and then it also points that yes, we will stay with this negative rates environment, because when they have their coupons due, they want the rates as low as possible so it doesn't bloat on their sheets.
That's why when you read every release, every bank, and I cited here, the Australian bank had their meeting Monday night. They talk about, there's only one or two sentences, but they always talk about their currency. The Fed never talks about the currency.
No, they are a lot more up front. You're right. You can read and you understand what happened in Australia, for example. They will tell you. Whether it's manipulation or not, they don't care. They will state.
It's the same with the ECB. What does the ECB say? We don't target the currency. Okay, you don't target the currency. I don't even know what that means. And that's why, Matt, do you have what I sent you?
Yeah, hold on. The blog post with the addendum?
Well, I sent you both. So I sent you the addendum and
Yeah, got them. Yeah.
Well, I talk about what Japan does there. Japan is absolutely manipulating its currency, but they do it in this way. And that's what the blog post is all about. Because there was an article in a Japanese paper called the Mainichi on May 28th. And the title of it was Bank of Japan assets quadruple to 6.5 trillion under Kuroda's aggressive easy. That's the title of the article, okay? And it goes to talk about how much of the Japanese bond market the BOJ owns, and now they've been buying stocks via ETFs. But what this does is Japan is the world's largest creditor. And this is where I call out the G7, because Japan, as the world's largest creditor, is always shopping for investable, for assets that are investable. Well, if I can't buy them in Japan because the damn Bank of Japan owns everything, I'm investing my funds around the world. And the Japanese insurance companies, pension companies, private citizens, or what we call Mrs. Watanabe, they're all scouring the globe looking for investments. And why? Because there's very little to buy in Japan. So when they go overseas, they are putting downward pressure on the yen, because in order to buy US stocks, you have to sell your yen and buy dollars. So the bank may not say that or the Ministry of Finance may not say that they're manipulating the currency. But when I read this article, I go, well, this is absolutely currency manipulation, because the more the Bank of Japan owns, the less there is for them to invest domestically. And they have to go around the world chasing nominal yields and or equities, almost like the Swiss. But the Japanese are not doing it directly through the bank. They're doing it because the bank does it for them.
They're not buying foreign equities like Swiss bank buying Apple or FANG stocks.
Yeah, but they do it not on an official basis. It's just Japanese investors, which is why, for all you novices out there, when stock markets get hit and they say, well, the yen is a haven. It's not a haven. It's just that Japanese investors start bringing money home when they get nervous. That's what the risk on, risk off model is all about, because the Japanese have such huge global investments, huge. They're the world's largest creditor by far. And when they bring money home, but how long, and if you put up the euro yen chart, so all you do is have to run all the yen crosses. There's $1, the dollar is stronger against one currency, it's the yen. And it's been that way certainly for a while here. And I point to, where the yuan yen chart is. These are very important things. The article really goes towards, I think it's one of the best things I've written in a long time. And it's worth looking at, but I'm throwing down the gauntlet to the policymakers because they're being blindsided here.
Yeah, Ira, to your point, it's unbelievable. I just brought up the chart, euro yen. And last year around this time was 119, and now it's 134. It's all straight up trajectory.
Yep. And that's with the dollar being, has weakened over the last 8, 9, 10 months for sure. Yeah, well, we're actually going back to that. And I will have to say, Notes from Underground absolutely turned bearish the dollar on May 24th, May 25th of 2020 on what I call the Schweibel pivot. And I started to say, well, that the US, the Fed was flooding the global system with dollars, as it should have, by the way. I don't have a problem with that, but it led, and there was a lot of discussion for 3 months on the blog about my view on the dollar. And then people said, yeah, you know what, maybe it makes more sense. We saw the euro during that time go from 108 to where are we at? 122 today, 122 and a half. In the meantime, what has dollar yen done? We've gone, I can tell you right then on that date, dollar yen was 107. We're at 109 and a half. So the dollar yen is actually higher, while the euro has rallied, I don't know, probably about 12%. So, and this is all due that when the Bank of Japan is busy buying everything in the Japanese domestic economy, that forces Japanese investors to scour the globe looking for investments. Now they run some risk, currency risk, but actually with the dollar swaps, it's not such a bad thing. With everybody's rates at zero, they're not paying away anything to do this. So that's an advantage. So they can put a hedge on if they're so want to, but a lot of people don't do it because if you put the hedge on, it may take away whatever extra you're trying to earn. But everybody's trying to scour the globe looking for alternative investments. And you know what? As I would, you know, it's all they use quotes that if you're sitting at a poker table and you're wondering who the patsy is, it's you. But I like to look at it through the eyes of one of my favorite lines in a movie from Guys and Dolls with Marlon Brando. In the movie, Marlon Brando plays a character, Sky Masterson, and somebody's trying to make a bet with him, and he knows that it's a set-up bet and it's a sure thing. So he says to the guy trying to make up the bet, he says, you know, when I was a lad, my father said to me, son, one day somebody's going to come up to you and they're going to say, I'm going to bet you $100 that I can make the Jack of Clubs jump off of this card and spit apple cider in your ear. And you're going to go, that's not possible. And you're going to take the bet. And the next thing you know, you're going to have an ear full of cider. Well, I believe that the Fed and the Treasury have an ear full of cider, but maybe they want that. You know, maybe that's the policy action that they want. They want a weaker dollar and they want everybody taking advantage of the US because it's better for the global system. Maybe that's what they're, you know, but that's where it does lie. So I think that going forward here, we're going to see some fabulous, interesting markets, and volatility is going to increase dramatically.
Doesn't that represent a complete shift in just, you know, the old capital flow models?
Sure.
I mean,
don't tell anybody. Well, as Robert points out, and he's giving you a view from somebody who's lived in it, is that when you go to negative real yields, the whole world is turned upside down. And now you see, not only do they not know how to get out of it, they keep prolonging it, they're still buying 120 billion a month in assets. Please tell me, as Peter Bookvar has pointed out for 2 years, 3 years already, why are you buying mortgage-backed security when the housing market is booming? Why are you keeping more upward pressure, which is, what is it doing? Chasing the middle class away from being able to be home buyers. The policy is so flawed, but they're so arrogant. And there's one thing that I can't stand, it's arrogance.
and also, oh my God, the whole thing, it's scary. It's terrifying to think, like Robert said, it's terrifying to think about what the end game is going to be.
Well, yeah, I've been terrified.
Through it. I remember at the age of 18 in Poland, when they had 1,000% inflation, Barcelowicz, finance minister, he said, we will just, you know, completely kill the inflation. I remember people's ceilings were collapsing because they were storing sugar or flour in the attic.
God, that's amazing. So right to that, Robert.
Those are not pleasant times, but you live through them, and you know, you always look for opportunities in those times. They were buying used cars like crazy because they kept value much better than the things. It's just a number of things that I think maybe here in this country yet we kind of lost the edge if there is going to be high inflation, but people are very astute now and they will catch on very quickly. And I'm not implying we're going to have hyperinflation, but we will have to learn to live with the inflation, I'm afraid.
People are not stupid. They know how to react. They know, and my wife will tell you that from doing tax returns for people who earn under, you know, I think the limit was $35,000. And they could quote you chapter and verse about the earned income credit. Now, most people I know with advanced college degrees can't tell you about the earned income credit. But I'll tell you what, my wife was always amazed, chapter and verse on, you know, with what kind of credits you get, with how many kids. They knew every inch of it because she would sit there and talk with them. And, you know, and she was always amazed. She loved doing this work because you got to deal with people with something that they care about, their kids and their money. And they knew chapter and verse about so people are, you know, I am always amazed that when you're a policymaker or you sit in the Boston, Washington megalopolis, or you're in Hollywood, or you're an academic, you have great disdain for the common man. Me, I put on Aaron Copland and listen to his music for the common man, because I have great respect for the common man. Doesn't mean I agree with, everything that they have to say, but they're the people who fix your car, who repair the airplane that you fly on, who clean up your messes. I have great respect for them. I think, you know what, and if they're getting a pay raise, I'm all for it.
I had that conversation with my son, Danny, that lives out in Vail, Colorado, who's in the middle of looking for jobs. I think in our last conversation, we were talking about what was it, the $50 bribe that McDonald's is giving out to some just to come in and interview, or to fill out an application. You get a half a Charles to come in to fill out an application. I'm running all over to every McDonald's I can possibly find.
Hey, listen, I just saw somebody was paying like college kids $2,000 for a signing bonus to come and work for the summer. Some retailer.
Oh, Ira, again, I hate to bring up the ECHO example, but we pay $1,000 permanent employment, though, for welders and machinists. And to your point, on the children, money, earned income credit, that's exactly what these guys are saying privately. And they said, look, Robert, I'd rather get the 300 in the pandemic assistance, another 300 of federal government unemployment assistance, another 600 from state, plus I have a side job for cash only 10 miles away from here that adds up another $500 a week. I'm all set. I don't need a permanent job. It's almost we're creating problems for ourselves as a nation, because it's hard to get the permanent workers to get into the job and then they have to pay the tax, Social Security, Medicare,
all of it.
Where it's aggravating that politicians do not want to reward our servicemen, for example, and say, you know what, ECHO, if you hire the serviceman, combat person, you don't have to pay the tax. Oh, by the way, why do they have to pay the taxes? If somebody served in Afghanistan or Iraq, 4 duties, why should they even pay the tax? Why can't the politicians come up with something and say, you know what, you don't have to pay the tax. We'll cover you. I would swallow this much better than seeing what's going on now when we're giving away the money and the people buy foreign products, and that doesn't make any sense for us. But
amen.
Now on the politics side.
Well, listen, that's right. And they all talk about, the wealthy will pay more. You know what? Burn the tax code. I don't believe in book burning, but if you burn the tax code and went to a 20% flat tax, and there's, and have a minimum of where it starts, this country would be so much better off. But the amount of money that would go to the politicians would diminish dramatically, because most campaign contributions of the big money come from tax acts. Trust me on that.
You mean loopholes?
Yeah, crafting loopholes. Absolutely. Why else would you donate that much money? I don't care how you want to pretend that you're so friggin' benevolent. I don't believe a word of it.
And to best testament to this, maybe not the best country to quote, but you know what happened in Russia when Putin enacted, I was still with Ford in Germany, maybe year 2000, he put the flat tax of 10%, maybe 12%, eliminated, and the revenue they gathered, it increased dramatically.
Yeah, absolutely.
I'm glad you all the loopholes, and Putin as a dictator could right away.
Don't tell, nobody wants to talk about that. They collected so much money, and what people don't understand, Putin's main goal, and it still exists in China, it's making sure people have enough food. In Russia, it's making sure that those pensioners get their fucking pensions, because and this is why I can't stand Jeffrey Sachs, that arrogant son of a bitch. And I wrote a comment, he wrote an article the other day. And I wrote, because when they went to Russia in 96 and 97, him and Broder, they did so much damage that, and the fear was that the pensioners, and don't forget, those were older people who were not taking part in the switchover from the communist-run dictatorship to a more free market economy, because they didn't have the skills. So you had to raise those pensions. That's why Putin went after the oligarchs, because he had to get the money from somewhere. And then they put the flat tax in, which filled the coffers, as Robert says, but he had to make sure, and still make sure, that those pensioners, because if they don't, the country will be absolutely in a civil war. So he bought off the pensioners. He bought it off by having the oligarchs pony up a lot of money. And then, of course, they depreciated the currency. And so all the dollars that they earned also filled the coffers. I mean, really, when you look at it, in 1998, the Soviet Union was Russia was in crisis, as we know. But now, on a relative basis, they're probably the best as far as, government debt versus GDP numbers. I mean, and their central banker, who I call Elvira, the mistress of the dark, because I can't pronounce her last. I have trouble with her. But she is a great central banker, and she's made a lot of really good moves here. Of course, it gets lost in the regular narrative about Russia, but that's 100% that what Robert talks about is right. And when he went to the flat, I think it was a 15% flat tax.
Yes, I think so. I think they tried 10, but they very quickly went to 15, and it was still a stellar success. They keep pensioners, though, just a little bit above poverty level. These guys are still making about $100, $125 a month now.
Right, but
Russia doesn't get you too far, but they, you're right. They're watching closely, that group. They just keep them fairly okay so they don't fuss and join young people.
He had to make sure. And right now, oil's up. Believe me, the pensioners will get it. When he wants to win election, well, does he even have to run? So that's
No.
Yeah. But
no, he put everyone in jail who was significant threat.
But he knows the strings to pull, and he'll raise the pensions because the coffers are full. And when Nord Stream 2 comes on, and Europe is that much more in the pocket of Russia as far as its energy needs, please, he'll be able to. He'll win with the numbers that'll make Saddam Hussein blush.
I'll never forget I can't remember the secretary in China's when Kissinger asked him, "What do you think about the French Revolution?" He said, "Too early to tell."
Go and lie.
Yes, and that makes me think about just how Russia and China have combined to very quietly, just buy huge amounts of gold for the last 5-6 years.
Oh, yeah.
And which has increased dramatically, not only mining it in Russia, but also, China buying it anyway, and continually playing that long game, so that now it appears to me, especially and again, just conjecture and opinion, and because I'm so far behind, a very weak opinion, admittedly, is that the U.S. seems to be in such a weakened position worldwide that the long game that Russia has been playing since the fall of the Soviet Union, and China, for only, you'll have a much better idea, but that long game that they're playing is starting to really look like it's weakening the U.S. not only financially, but culturally and in every other way. Going back to how does this end?
Yeah, well, listen, the greatness of America was that it was ability to be flexible in response. I don't know that we're as flexible as we once were.
Yes. Great point. Isn't that, well, And isn't that what free market capitalism is? You know, free market capitalism gives us the chance to go out and fail and try again and fail and try again until we succeed, until we become innovators. And we don't have that anymore. We're paid to stay home. We're paid to be mediocre. You know, we are rewarded
for not taking a risk.
That's it. Yes.
Well, I believe we still do it well. It's just that everyone has to soften it. And listen, I'm a libertarian who believes in a safety net. I absolutely do for those
sure.
most vulnerable. I do. I think it's very important, but you always have to look through the politics when people come a calling, so to speak. So.
Oh my gosh, there's so much.
Is there anything else that anybody's pressing? Otherwise, it's just pretty good.
Thank you very much, Ira.
I didn't really, you know what? I think that blog on the yen is going to be important. I'm going to tell you, I'm early, but I think people, again, we sleepwalk through a lot of stuff because as Ben Hunt from Epsilon Theory would say, it's all about the narrative and what narrative you want to continually cast out there and believe. That's why it takes so much time to do the work to do this, because I don't, you know, as Matt, you and I have laughed, but it's true. What do I bring to the table? Context and nuance.
Oh boy, I can't tell you how many times I slipped that into conversations.
Because that's truly to me what it is. It's understanding that. And by understanding it and working with it, you're able to see through certain things. I'll tell you what, the discussion, and I've had it in this room and with many in Judd's room and several FRA podcasts with Louis Gavet and David Rosenberg and I argued, but now all of a sudden he's running with that discussion.
Oh, I meant to ask about that.
Why, how do you know that China's stockpiling? Now I know, because I'm looking at the yuan and I never back. Now all of a sudden he said, well, that won't be a choke point. I don't have to call it a choke point. It's just a dynamic shift in the world economy.
And it's all interconnected. And what does that mean for us back at home?
So, Ira, to summarize, you see definitely a shift in China's policy where they no longer devaluating yuan and they keep it purposely stronger to have a better purchasing power.
I don't make noise about it. Like there was a conflict between two people, you know, because one guy from the BO said, no, we're, you know, he made that point and then he had to retract it. In fact, Zero Hedge said we couldn't even find it anymore. It was absolutely erased. So yeah, it's going on because I could see it in the market going on.
That is true, Ira. Many times markets front run the data or facts, and you wonder sometimes what the hell is going on. You look at the chart and something is completely, you're baffled by it. And then 2-3 weeks later, or sometimes several months later, you say, now I see the rest of it for you, and an announcement comes out.
Yeah, and you know what? Again, this is all gibberish unless we can put it into meaningful investments. And the reason I wrote the yen piece, because if that changes, the effect on global markets, on global bond markets especially, the effect on global markets and other asset classes, if I'm right about the world looking at the yen all of a sudden going, hey, what the hell? Are you kidding me? Because then the flows are going to change dramatically. Maybe that's why they'll keep allowing it because they want the Japanese, you know, investor money. So I could be wrong, but I'm just looking at it again from a global macro perspective going, wow, this is having a very, very big effect. But you can't then tell me as the G7 or G20, oh, you know, we support the free flow of, you know, free floating foreign currency. No, you don't. You're full of crap. And I like to call the established elite policymakers for the nonsense that they put out there. Because you know what? A lot of times there's great investments to be made by seeing through their nonsense. And that's what we're all about. The rest of it, you know what, go on CNN and pontificate all you friggin' want, because nobody ever challenges you, and you just get, it's just a pulpit for you. So I don't care about pulpits. Let's discern. And you know what? The greatness of the blog, and the reason I keep it going, is the comments that go back and forth that challenge everybody.
Yeah.
There's really wisdom there. But the fact that we were able to get rid of so much of the crap.
No, it's very much true, Ira. Even in corporate world, when we had the CEOs who hated to be challenged, we didn't grow as much, whether it was Ford, CNH, Echo. And when you have a CEO who promotes the healthy discussion and truly, honestly, is not afraid of challenge, and you can put any question in chat, and all of a sudden they read your question to the CEO. I knew myself when I tested our CEO, they read my question within 5 minutes. And I said, wow, this is not filtered. This is not censored. Eric takes all the questions. It's a pleasure to be in an organization when you have a healthy criticism and you welcome to give your opinion, and then you hear the response of your CEO. So it works in a corporate too. If you have a tyrant who hates absolutely any criticism, doesn't work.
You know what? I don't invest in, and I can tell you, Robert, first and foremost, sitting on the CME board from 1997 to 2003.
You know it.
And I was one who challenged in a positive, always constructive. You know, there are those who are on there who are gadflies who just love
Yes, you cannot throw the stuff.
Yeah, they're a pain in the ass. But to me, what made the CME great was that there was, you know, and I know people from other boards who sat on the board at the time, a couple who I had gotten on, and they said these meetings that's what they complain about, is usually, you know, board meetings are 40 minutes, 45 minutes, and then they have lunch or dinner or whatever. CME board meetings were 5 hours. And it wasn't the amount of people on there. It was that things were really discussed. And I think it worked to the CME's great advantage and made it the innovator that it was, and was able to move in the best fashion possible. Yes, the meetings were long and arduous. And there were times I would get out of there at 8, 9 at night for meetings that started at 2:30 in the afternoon. And I'd have to go have a couple of scotches before I could even get going, because my brain was toast. But a lot of good things came out of there. And I'll tell you, you know, I'm still trying. I'm not going to run for election ever again on the B slate.
Oh God, that was ridiculous.
Yeah, I lost this year terribly, and you know what?
Yeah, but how many people voted, Ira?
You know, they got a quorum on the B2s. But if I'm not slated on the A slate, I'm never running again. You know what? It's demeaning, and you know what? And there were people who called me who are on the board who said, we need your voice so badly. I said, well, you should have worked harder to help me get elected, because, you know, it's an art. It's not like when I had access to the floor and I could talk to people and engage people all the time. It's not like that. And the votes come from other places, so to speak. So, but I will not, I promise, I will never run on the B slate again. So if Pat Maloney's listening, he'll be very happy, because not that I can't beat it anyway. So what's the difference?
You know, Pat's a good. He's a nice guy. He's a good guy, but
well, he's not. You know what? Again, when I was on there after Westcott died, and they had to put me on in 2019 from August. You know what? People said to me, it's such a pleasure having you, because listen, everything like I talk here, I bring that global perspective, and I'm trading everything. So I have real time experience, and I have a readership that keeps me informed. I'll tell you what, last March, April in 2020, when there was a sense that there was going to be a squeeze on the gold deliveries, my blog readers were a week and a half ahead of everybody and called me. I got a call from London from a guy who was a big trader who I've known for years. I didn't know he was a blog reader. He says, I got to tell you about this, da, 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 da. And I was able to talk to, you know, to get right to the exchange, because I was hearing from them.
That was all during at the eye, the beginning or in the middle of my eye battle. that was horrendously disappointing. I'm very sorry for that. And Terry Owen and I were out. We had some conversations with some traders that we thought still own their B shares, and so many people don't. Who owns them anymore?
Well, in my crowd, the older people they don't vote.
Hey,
So
have you looked at Leo's new book?
I read it. Finished.
How was it?
It's good. It's good. Yeah, well, if you don't know the history, a lot of it I know so well. But I read it. I read the whole thing. Read it. Read it.
I'm going to. Yeah, I downloaded it today. I'm gonna order a hard copy and get him to have him sign it.
Yeah, he sent me one. I never proofed it but I was happy that he stayed away from some of the things that and he wasn't looking to just deliver that he
right.
delivered that he could rightfully deliver, but he stayed up and he really kept it at a very high level. So I was very happy.
In light of some recent deaths and there's a lot of different things that could have gone on.
Right, and he didn't throw shit. He didn't. He really went to the high ground.
Yeah, excellent, good. I talked to Jordy just a couple of weeks ago. I need to get back to him.
Yeah, I haven't talked to Jordy. When he would come to visit his parents in Arizona, we'd usually go and have a coffee or two.
He was in Arizona when last time that you had dinner with Leo and Betty. He was in town. I know he was staying at his mom and dad's house.
Yeah, but with COVID and he had his daughter.
Yeah, right.
I know.
Well, Ira, again, thank you, Robert. Thank you for holding up, the PAX group, our end of the conversation, and Ira, again, thank you so much for all of the work that you do. My son Danny is here for the first time, listening, and he texted me, "Oh my gosh, what are you guys talking about?" And I just said, just take notes, listen, keep your ears open, and take notes. Let it sink in. Look up what you don't understand, and you'll get a PhD in global economics just by sitting here listening to Ira speak and reading everything he puts out.
Yeah, man, I still enjoy it, and again, I don't get paid directly in any way, shape, or form. Some people have paid me over the years, they said, but the discussion that goes on the blog, that's worth everything. Because it's high quality. It's almost like it used to be for me when I could sit in my office and, have conference calls with people from all over the place who really understood it. And I would learn as much as I could teach and it's the same thing. And then it would really ferret out some very good investable ideas. And that's, again, at the end of the day, it's all it's about. Otherwise, it's just gibberish. And you know what? As I would tell my kids, the world's full of opinions. And everybody's got everybody, but you know what? Be willing to listen to what other people have to say. And again, I begin every one of my days by reading those people who I would probably most have a disagreement with. But if I find that they've raised an issue then I'm way ahead. I don't seek your validation. I don't need your validation. The market will validate exactly what I'm doing. I'm here for the best discourse possible, because that's what's going to put money in my pocket.
Amen. Yeah. Absolutely. And now that the world's opening up post COVID, let's see if we can't put some money directly into your pocket from here too.
Yeah, we'll try. You know what?
Yeah,
I'm not opposed to it, because again, it's a lot of work, and
yes, it is.
A lot for the work. But I will say this: when we did the charity thing, it's a year ago already, for Santa Mike and Misericordia and St. Vincent de Paul, we raised almost $100,000.
I know it. Well, thanks again for your time, Ira, and thanks again for all of the work that you put in, because I benefit from every single one of our conversations and every word that you've taken. Again, I've got 2 pages worth of notes and I'm so far behind in everything, but at least now I know where to go. At least now I know what direction I need to head so that I can get a better understanding of the context and nuance of the global macro situation, so it'll enhance my trading and my positions that I'm currently carrying.
Oh, and there is so much going on because the central banks have followed up the system so bad. Now you could say, well, no, they didn't follow it up. They made sure that it's safe. Okay, again, absolutely. I disagreed with Santelli for well, we resolved that because he finally had to admit that was right. QE1 was necessary. Everything after that, we can have an honest discussion about. QE1 was necessary. You do not, in capitalism, ever want to see through. Now, of course, if you're a Calvinist, you'll say, yeah, liquidate the system because people who took on too much debt should pay the price. But if you want to get biblical, don't forget there was always a debt jubilee every 50 years.
Yeah.
So,
I think that's, I think that might be the only answer.
well, again, not when you're the world's reserve currency. So
True that.
we're in a, again, and the key thing is the U.S. has stopped being a systemic fiduciary. They have the asset of a world reserve currency, but their actions carry no fiduciary responsibility whatsoever. And I think that's what has really woken the Chinese up.
Just when I put my notebook down.
No, but tomorrow with Michael Pettis, that one should be very good. I've never talked to him. All I've done is read his book. In fact, I will direct you if you want to prep yourselves.
Yes, please.
I have it in my hand. Let's go to the video to show you that I'm not. Can you see me?
Yep. Oh, I like your glasses.
What do you see?
Far Eastern Economic Review.
Yeah, the date is June 2007. You can find and there's the lead article is, and this is actually, or I'm not sure it still exists, China's last option, let the yuan soar. Now I still have this. Now I really have it. It's only by happenstance. I mean, I read the article and I would read it, but my son does have an article in here as well. When did he have his article on? So that's why I have saved it, but it's very fortuitous. Oh, he has an article on an expose of Japanese pork barrel politics. But Michael Pettis, China's last option. So you can see what a jumping off point it is. And you go find it, it's the Far Eastern Economic Review, and you can read it and see what he was thinking about 14 years ago. It's exactly 14 years ago. So,
Yeah, it is.
So that should be a very worthwhile discussion because it is really so timely. This is and if China's been, if people want to see it through a digital currency, that's a whole nother story. But if China's looking for the credibility, it's going to need to back its currency for greater acceptance with something. And I believe China being a revisionist power now, not a status quo power, they'd like to remind the world of the effects that they suffered under Western colonialism. And nothing, China is a disruptor by design. It's like in Silicon Valley, they'd call you a first mover. China's a disruptor. They're trying to disrupt the international system as we know it. They want to take advantage of it, but they're disrupting it. And nothing would disrupt it more than to have a precious metal-backed currency. Because don't forget, in the West, in the developed world, we're totally fiat-based, and we've gone away from that, so much so that, as Keynes called gold a barbarous relic. Of course, it's a phrase that gets used that you have to dig as to what he really meant. But if China really sought to disrupt it, and it wouldn't be on a one-to-one basis, it's not that an ounce of gold it won't be that way. Because in today's derivatives world, you can do this in all kinds of creative fashion without, pledging 1 ounce of gold to, whatever you want. So this is going to become fascinating. And, again, if you're in this arena and playing, you have to be attentive to this.
I'm looking forward to tomorrow. Will Richard have that out? Will Benuli have that out and turn it around the same day, or will it take a day or so?
Oh, we're doing it out because I'm doing it at 6 o'clock tomorrow morning.
Oh, God, he'll have it out in the afternoon.
Yeah, 9 o'clock Eastern time. So he should. Usually they've been pretty good, especially when he listens to it and he goes, "Oh, this is big," so he'll try to push it out because he knows I want to get it out to my readers. So why hold on to it?
I'm looking forward to it. All right, Ira, again, thanks so much for your time. And I look forward to listening to tomorrow, and I'll contact you later on in the week and try to talk early next week.
Great, no problem.
All right, thanks, everybody.